is this just a retracement, or are we talking about a far deeper pullback, something far more bearish than maybe just a retracement after a very strong December of window dressing and maybe a little window undressing? Or is this particular market concerned that the Federal Reserve may not be cutting as quickly and as rapidly in succession as was thought as we ended 2023? That's where we all are trading right now. That is the world we're trading. So let's get some clarity here, with that being pretty much the drive of some of the weakness we've seen. Now, I have the chart of Apple here because a lot of people have said, Rog, what do we want to do with Apple here? What's the opportunity? So, by the way, this PSC, don't worry about it. That's actually the previous session close. It's something we use for day trading. So if you see that line on my chart, that's not going to really apply to the end of day. All right, so what do we have here? Take a look. This is the 200 propulsion. A lot of folks have said, Rog, how do I buy Apple? I'm going to show you right now. This is the daily price movement range. This is a neutral environment. On the chart of Apple, the trend that preceded was up. So this is really a neutral bullish environment that's still north of the equator, which is this 200 propulsion. I love this because the equator tells me that for the most part, as long as price is above those white dots, the general idea is we still want to buy Apple in the broader market. The closer we get to 180, and really 180 to 177 in that zone, really 178 in that area, that's going to be where I'm looking for buys. Now, the daily price movement range will update every single day, and you'll see there's a slight nuance in the way it updates because it's looking at 6 months of historical data and then projecting where the range for the day could be. Apple support is what we're keying in on, and ultimately what we want to do is focus on the long side as close to the propulsion dot at 178 and down to about 180, about 180 down to about 178. And that's what I would do with Apple. Now, Apple is going to have a lot of impact on the NASDAQ, and the NASDAQ is going to have impact on Apple. So there's definitely a dual idea here. Let's go take a look at the NASDAQ futures and also the QQQ. Similar setup, far more bullish here. This is where the NASDAQ could be the tide that lifts all boats, Apple being a big boat, but just a boat, right? So I take a look at the QQQ or NQ. I know that XLK, XLC, and XLY, as well as the SMH, are all weighted within this. And then, of course, Apple would be a heavily weighted stock in the XLK. If the NASDAQ bounces from this area, daily price movement in play, as is the 34 EMA wave, high tide lifts all boats, Apple benefits. All right, Apple benefits. So we definitely want to be still bulls, gang. I know that's a pullback, but remember, healthy trends correct. And the difference between a quote-unquote reversal, right, and a pullback or a retracement. Let's think about reversal versus retracement. And that really is the theme here, reversal versus retracement. It all comes down to structure. If I have a uptrend that's just barely going neutral, all right, it's just barely going neutral, then I know that this is really just a retracement. And this is, well, then a dip, right? So a dip and a retracement are synonymous. And if that dip lands me in the wave, a price-based indicator, awesome. If it lands me in the daily price movement range, awesome, which, by the way, is on sale till next Friday. You'll see how much I rely on this thing. Great, right? But structure dictates strategy, and therefore the strategy is still buy the dip, and the indicator would be either the wave and or the daily price movement range. So NQ in this range is going to help Apple a lot. All right, another name that I've been getting a lot of questions on, it's one of the more popular names, and it is involved in the tech space, is Tesla. All right, let's take a look at Tesla here for a moment. Unlike that chart of the QQQ, or even Apple, Tesla has yet to really see an uptrend. Tesla was a laggard all last year. Doesn't mean it can't be traded, but frankly, gang, it's doing its own thing. And that's okay. That's okay. But take a look at how often once, and this is really important, structure dictates strategy. Can I buy in a red environment? I absolutely cannot. But once it goes neutral, we're fair game. Once the momentum goes bullish, fantastic. All right, so above the 200, neutral structure, what am I going to do? Buy the moves into the gray zone. The gray zone is the support zone of the daily price movement range. So this is DPMR support. So, if you'd like, I'm going to clean this chart up for a minute. In just a moment, hit the pause button if you'd like, right? And take a look, go back and take a look at how many candles traded down into the gray zone, touched that gray zone, and then bounced. It doesn't have to be just that day, but take a look at the resulting action. And then also take a look at the most recent, right? How many times do we bounce into that zone and then go higher? The idea here is to find a high probability zone from which to buy. And a lot of you might be saying, Rog, right around 230 to about 227 and a half, we're coming up on one again. So if you want to pause it to take a look, do that now. Now, if you went ahead and paused it, you notice just how often this has happened. And this isn't just in Tesla. Although the next one I'm looking at is a fantastic combination of the 200 propulsion, the equator, and this zone. Now, ideally, we have an oversold stochastic accompanying this move, right? And that's exactly what's getting very close to happening. I'd like it to get down to this green line. That would be the low. And then that low, accompanied with this zone, it doesn't need it, but it's great to have it, would signal the oversold buying opportunity. That's Tesla. All right. A lot of questions on oil with the kind of movement we've seen. Oil is still struggling, gang. Oil is hardly out of harm's way. Meaning this is not an uptrend. It's hardly a neutral trend. So let's be really careful. But since it is just trying to get out of its own way, I will tell you, there's no real advantage of being a bull any more than being a bear. So how do we do this? When we're in the gold zone, look for long puts in USO or short crude oil or even the micro MCL. When we're in the gray zone, buy calls or get long crude oil or MCL. So this is still very much a very ping pong type market. Back and forth we go. I would not be really bullish until we get above 78. That means we're back above the equator. But in the meanwhile, back and forth between the gold and the gray. That means that things like crude oil, XLE, XOP, OIH. So crude oil's connection to the energy, oil services, and oil and gas explorers is pretty important. Now, stocks are a little bit ahead of the curve compared to crude. So if you're looking for a place to get long energy, it may not be at the commodity level. You might be way better off right now thinking about relative outperformers above the 200 in the XLE. Now, I'll give you a list of what those symbols are. What is in the XLE that's either in an uptrend or above the 200? And it's a pretty short list. It's not Exxon, it's not Chevron, it's not Schlumberger. What it is, starting off with heavily weighted stocks, is ConocoPhillips. Phillips 66 is in an uptrend. Valero and Hess, right? That's in the energy sector XLE. Now, what about the OIH? This is still related to stocks, to the commodity of crude oil, but now we're looking at outperforming stocks. I would actually avoid names within OIH. Oil services are really struggling. So I would avoid, for the most part, OIH. That brings us to XOP. Now, XOP is interesting. XOP is not just oil and gas services, and not only will it move based on what crude oil is doing, it will move also based on what natty gas is doing. And just as there is the USO alternative to crude oil, there is the UNG alternative to natty, right? So if Natty's moving higher, crude oil is not, XOP and the sector FCG, these stocks could outperform. All right. Now, I don't have a lot that I love in the XOP. I really don't. And if I crack open the FCG, FCG is the natural gas sector, not of the commodities, but of companies that are attached to the natty gas narrative. So this brings ConocoPhillips back. You might say, yeah, why is ConocoPhillips doing so well in the XLE? Why is it a relative outperformer? Well, would it surprise you that it's attached to the natty gas narrative? It's weighted in XLE. It's also weighted in FCG. That's what's kind of cool. So is Hess. So now it's starting to become clear. What else is in that? Fang is here, right? What else is here? Western Midstream is in here. So when you're actually, so is Pioneer Natural. So if you're looking for energy strength, in some circles around the crude oil narrative, it's tricky. But when that stock is weighted both in the XLE and in FCG, you're going to see where the outperformance is coming from, and that's where certain stocks are shining. All right, so that's another way of looking at not just crude, but also natty and how that affects the XOP. So XOP might actually start to outperform if natty can continue through the 200, which it has. It's broken the downtrend. It's going neutral. It's north of the equator. It's in the bullish hemisphere. That's exactly what we want to focus on, right? So I hope that gives you some things to look at. By the way, one of the charts I'm going to be looking at with my Sector Secrets Mastery folks on Monday are bonds, ZB and TLT. So put it on the radar. This is one that we're looking for a buy the dip. At this point, everyone should say, yep, Rog, I see it. Green structure, north of propulsion, wave and daily price movement range. Look at that. You learn how to use the process in 12 minutes. As always, gang, thanks so much for being a part of the Simpler community. Thank you for watching the videos. I appreciate the time. Hope this gives you some things to work on for next week. And as always, if you have any questions, leave them below. Thanks for smashing the like button. I'll see you next week. Be good to each other.